We had a pretty turbulent market week. For the last couple of weeks in general, the market's been in a bit of pullback mode. I'd say this really kind of got accentuated on 321, and then we had a couple of days of chop, a look below and fail actually on 327, and then we rallied up. So today, and of course today, we had a move down. So my take on this is there's a few things going on here, and I had listed them in a tweet the other day. You basically have new geopolitical risk that has come into the market in the form of Korea. The market's got a little bit of uncertainty going. I don't necessarily know if it's as big of a deal as people want to make it to be, but it is some uncertainty, and there could be some tensions. It seems like there'll be some type of an incident, maybe over the weekend, that causes there to be some type of a gap down on Monday. That seems that seems to be what the fear is for traders. It's also a funny time in the year. We have taxes coming up. Usually it's April 15th. I believe it was pushed this year because of the holiday to April 18th, and I think you've had a lot of people selling positions to raise money for the tax man. You've had some supposedly more hawkish comments out of the Fed, which has been causing some problems. And then there's the media's narrative that the Trump rally is sort of over or stalled or what have you. These have all kind of come together to form this, this pullback. For me, my take here is that the market just got a little bit overextended. It rallied quite a bit. You can't just continue on forever, and it's been in a bit of a pullback phase. Actually, if you look at the market on a weekly chart, it's much less bearish than if you would on a daily. And my take on the daily is that look at all of the effort that the bears have been looking to put in, and they haven't really gotten rewarded all that much in terms of prices. The gap downs seem to keep getting bought up. So one thing I look at that is always important to me is what should happen in the market and what actually does happen. And I'll say this. On 2 days ago, on Wednesday, we had a look below and fail of the 50 MA and the range low, which I had defined as 233.91. That was sort of the range low. We had a big cattail there, and then we had a move up with a look above and fail. It was kind of a look below and fail, then you had a look above and fail. Then on Wednesday, 4/11, you had a look below that low and below the 50, which really should have tanked the market, and it rallied back up. It didn't quite, however, get back into the channel. I will go over this, and you'll be able to see this very clearly in my weekend video, which is a tease for Sunday. And I am still working on some software that's going to be able to have me doing some screen share with YouTube Live. I've had some issues with finding software that I like that both does the live and does the picture at the same time, but I am playing around with it, and that is in the works. Anyhow, we had lost the channel that day. It wound up closing okay, and by all means, if the market was going to act quote-unquote more normally, it should have been up the next day. Thursday should have been up, and probably today as well. But we were not, actually. What I had anticipated, what should have happened, there should have been a gap up, and there wasn't. And we wound up being the first day with a close below the 50 MA. And you know what I always say, if you lose the 50 MA, the 100 MA comes into play. Kind of rhymes a little bit, too. So that's really what is going on. And then today, we lost that low, and I think that there was a lot of fear, as usual, about being long into the weekend, and maybe there's some kind of a larger gap down on Monday, maybe even to that 100 MA. Not that much really has gone on, though, as far as price goes. The real breakout in the market that I see was 228.34 to 229.71, and we have yet to test back to there. So that's a key level. I also see 231.61 as the last reference low. That would be an important level. Either of those areas, to me, should be areas that should be of support. Right now, we're starting to make some lower highs in the market, but we have yet to start to really make lower lows on separate legs. However, if we did lose the 231.61 in SPY, that would be a pattern changer, right? We would be now moving lower from lower highs to lower lows. I've drawn in a couple of channels that I will display to you on the Sunday video of potential down channels now if we really are transitioning. My thinking right here is that the 100 MA will hold. That would also roughly be, I want to just see something here. Yeah, that's sort of the breakout zone, that area, that 228.34 to 229.71. That area should hold, and you have the 100 MA right now at exactly 230. So my thinking, right, is that that area would be a hold, and the ideal scenario and setup, of course, for Monday would be a gap down right to it, and then you could kind of buy the dip with a tight stop below that low. And of course, we would be using the overnight inventory levels as a key as well. Like, for example, the ideal setup there would be for the market to make a pre-market low, and then the RTH, regular trading hours low, be higher than that low, and then trade through the opening like 5 or 15-minute high with a stop below that low as a long trade. If we were to lose that overnight low or pre-market low or whatever it is, then you might want to back off a little bit because there could be some still further backslide. But right now I'm thinking 100 MA, and I'm thinking 100 MA probably that area. It may press through intraday or what have you, but I'm thinking that area is likely going to hold at least the first go round. A couple of things I think that the market has going for it, and a couple of things I think the market doesn't have going for it. There's a bit of a, we're coming into earnings season, and that I think is going to be good. At least we won't have to only trade on this geopolitical news. The lack of earnings season and the, I guess, the lack of policy has put us into this vacuum, and we're, fixated on North Korea and mother of all bombs or whatever going off in Afghanistan. I always say this, that if the events aren't affecting earnings, I don't really see them as being more than short-term issues for the market. A lot of people, I've done some surveys, I keep hearing on TV the sentiment surveys are all like supposedly super bullish. All I ever see on most of my polls that I do are people are rather more bearish. The one I did today though, most people, it still is 18 hours left to go, but so far 48% thing up, 39% thing down, and then 13% seem flat. So we still, even though that sentiment has improved a little in this poll versus the last one, it's still below half, which is, to me, still showing that we are way below a euphoric level. So like I said, my thinking here is that there probably is a little bit more down in the market, but I am expecting that area to hold. What would turn me back more bullish now, if we were to get first of all, back above the 50 MA and back up above Wednesday's high of day, which was 235.18. So like, let's say Monday isn't down and it's up, I would start getting bullish again and we could maybe form like a W pattern here to come out of if we were to get back up above 235.18. So those are the key levels that I'm watching here. One of the leaders that has been, I guess, kind of a laggard lately is the financials, the XLF. This thing just was up way too much, and now it's kind of backing and filling some of the gains. And I did a little bit of math on this. I took the range low, the consolidation range low, to the recent high, which was 228.85 on the low end to 25.3 on the high end, and then I basically projected that down, and that would take us back roughly to the trend line. It's around 2040. I have the trend line around 2066, which is about a 78.6 of the entire move I see an important breakout level around 2178. Again, I will show all of this in the weekend video, right around the 200 MA, and that's also the 61.8 of this range. So I'm not really bulled up on financials yet, but I'm starting to get interested on drops a little bit lower from here. Again, we still haven't broken the range to the downside yet. We're still kind of in there, but on 317, there was kind of either a bad tick or some kind of a wild trade down low, down near 22. I feel like the machines see that and they want to retest those levels, so that's why I've been a little bit more concerned about the XLF. There's also a bit of a head and shoulders pattern in here, and if you'll notice, the range that I used from the range low to the high is basically the neckline. So a head and shoulders move lower would basically take you back, fill in some of those gaps, and really kind of take you down to trend. And at that point, I would get more bullish because I actually do believe that we're going to start seeing some reforms. A lot of people are like, so there's a couple of headwinds that are facing the financials. One is that the Trump agenda seems to be going a little bit slower than I think people would like. And that to me means that the rollback of the regulations, I don't think that that's going to be a 2017 issue, probably maybe 2018. It's possible it happens in 2017, but it seems to me like they're going to do the healthcare first, then roll into taxes. Everyone keeps saying, "Oh, healthcare is no, why are they focusing on healthcare?" People forget Obamacare is a big tax on the public, and that is a tax rollback in and to itself. And I believe it would free up something like $1 trillion to help Trump get his tax plan through, and make it maybe a little bit more revenue neutral if they have the green light of the repeal and replace. I think that there are some misnomers. I've been looking and like listening to the tax debate. I think the problem and the biggest mistake that I think that regulators are using is that they keep using this constant fixed growth rate of like 1.5%, and with a lot of the issues that Trump is looking to address would bring that growth rate higher. So I would be fine if they even use something like a dynamic score. Then it becomes the question of what to use as that growth rate. But I think that I don't think I would quite use 4%, but 1.5 is definitely not the right number. I'd be comfortable with something around even 2.5 to 3%. I think that is very achievable with some of these goals, and I think that they could maybe even maybe do some temporary type of plans that would maybe become permanent after certain periods of time or have to be renewed. There's a lot of different ways to do it, and I do think that there will be some type of a compromise. It's just taking longer than people have factored in. So I think that's what's pushing out the repeal of Dodd-Frank. I think is what's pushing out the bank rally. Also, interest rates now are coming back down, and the net interest margin isn't so great for the banks. I've heard a lot of people say that banks are holding a lot of paper on their balance sheet, and the interest rate rise is actually hurting those balance sheet assets. Yeah, I mean, I understand that argument. I think Dick Bove made that argument, but as far as their actual businesses go, they like rate hikes. They're good for banking business. Some of the banks reported today, JPM and Wells Fargo and so on and so forth. The reports were fine. JPM in particular was sort of the all-star. I put on a small play in Wells Fargo today. I sold some out of the money puts. It wound up closing a little lower, and I think could go even still lower still, but 51.19 is a breakout level. 49.84 is the 61.8. And then today, the 200 MA and the 50% fib were kind of close in the 51s. So that's why I sort of started it very small today after multiple days down for a beginning of an entry with selling out of the money puts. And if we were to ever get down to 48, which is the gap fill really, where this rally really started off from, I mean, the ultimate gap fill, of course, is 45, 54, but I don't think we're getting there. I would be looking to kind of bring this position up to size, somewhere between the 48s and the 49s, that area to me. Then I'd start getting a little bit more aggressive with selling out of the money puts. So I began that process today in a bit of a longer dated mindset. And we'll see how that goes. Of course, if Monday's a big gap down, the initial, like I said, I did it small with the conscious effort that I am expecting it to probably go a little bit lower, at least for a couple of more days, into some of those areas. Why did I start today then if I think it could potentially go lower? Because I don't necessarily know that it's going to go lower. The 200 MA is a very important level. That's really where the gap and go took off from. Once you get to that, it can sometimes break or be fungible a little bit, and we're into some areas after already moving down a lot that start getting a little bit interesting to me. So that's why I began the process a little bit small today. JPM also, the same kind of thing. I think eventually this stock is destined for $100, but I think it's got to go a little lower first. If it were to get a channel low test, it would be roughly around $80. Hold on, somebody here needs a little bit of blocking. Block. Someone made some comments I didn't particularly like. So, yep, we can do some blockage. Anyway, $80 would be that level. There's a gap fill around 78.92, and the backside of the old consolidation channel is roughly around the 90 area. If you 2 times the range lower also, you're coming in around 77, and you have a fast approaching 200 MA around 76, 73. By the time it got there, it would probably coincide with those levels. So JP Morgan, I think, is probably got a little bit lower to go, considering they reported today and it was an outside reversal day and a failure at the 100 MA. So unless I would either be long JPM over the high of day today if you want to buy stop it of 87. If you want to short, you could use that as a stop as well. But I'm more interested in looking to kind of buy it a little bit lower, at least for a bounce the first time, because I kind of consider this all here one leg lower, and I don't think that coming from an all-time high that this SOB is just going to completely collapse. So JPM, I'm looking to get a little bit more, I'm looking to initiate a position in this now. But, listen, it hasn't broken the range low of 83.03, so there's really all not that much to talk about, but I do think it's going a bit lower, potentially to the 80s or even to the high 70s. That area, I'd start the out-of-the-money put-selling process, maybe in longer dated strikes, and probably around 70 if I can get those filled. Definitely somewhere below 75. 75 and below, to me, would start getting interested in a good old JPM. XLE is acting very odd here. Oil has been holding up like a champ. We're above 53s, and XLE today got sleazammed. I think this was just because of the failure to get over the 200 MA, and you've just had some sellers in that area. Chevron looks like it's on the verge of like a range breakdown, although it hasn't quite done it yet. And then Exxon, which had been looking like it was trying to improve, like on 331, you had this like sort of head fake move, and then this one kind of came back now to the range low. I think this is just going to be in a consolidation pattern. Exxon, I do have some short puts on in, but I would really start bringing that up into more speed if this could get like mid 70s, assuming it loses like 80, 81. That area has been the support. So there could be a little bit more down in that, but I really am not. I'm sort of grappling to understand how oil is staying up so high and these stocks are showing weakness. My guess is that traders aren't believing oil is going to hold these gains and could have a pullback. I'm okay with oil having a pullback as long as the pullback holds that 50 and 100 MA moving average confluence, which is roughly around 51.53. Oh, come on. What just happened here? These charts have a mind of their own sometimes. They like to give me the business. 51.9. No, that's the 10 MA. Yeah, 50. 51.59 to 51.53 are currently the 100 MA. Yesterday was sort of like one of those kind of like reversal-ish like bars, and then today was still inside but kind of closed on the lower end of that range after stalling kind of at the high. So technically speaking, you have a bit of a secure high in place here, and there could be some kind of a rollback in terms of price. If we were to use the low end of the range that we just came from and take yesterday's high as the top, a 50% pullback would take you to 50.34, and then interestingly enough, this to me is the key point, is the 61.8 is roughly at the range low, because we're kind of testing closer to the range high, and that's down in 49s. I don't really think oil gets crazy until you start losing 49s and 51s. That area to me would be a problem. But short term, that 50 and 100 MA moving average confluence is very, very important. If you want to try short oil, I think you could use today's high as your stop for that trade. If you want to play long, you could also use today's high as a buy, or try it down at the 50, 100 MA moving average confluence. Gold. I don't think I quite grappled with how long I was in the metals. Until the other day, actually, it was on 4.7. I had been long, and then I noticed the value of my account where it was in the morning and where it closed, and it was up big in the morning and was kind of like not so great by the end of the day, but sitting fairly pretty now. The metals have just taken off. We broke a secondary trend line and primary trend line. I've discussed this is up in 124s. That's also kind of where we topped out on the last move. It's up a lot of days here, but we broke now with conviction the 200 MA and the double top around 120.40, which we have been talking about. And when I say we, I mean me. I've been talking about it. The royal we, of course. So yeah, I'm kind of bullish. If there's a pullback to 120.40, which is the breakout, and the 200 MA, I'd say that would probably be buyable for right or right out. I'm long a lot in the miners, GDX, this NUGT, which is like a 3 times levered ETF. I don't even know how I got myself involved in that kind of a business. You know, I don't like those things, but it's been working out. And I have some individual miners which I've been kind of adding to, like, they're not even like high quality miners. I've been doing it on purpose because they're like $2 numbers. This is highly un-JP like, just so you know. I usually don't like these things, but I figure they can't all go to zero. And if some of them hit, they'll be good. The ones specifically that I've done, I've really been shying away mentioning them because I don't really condone the trades. It's sort of, but whatever, right? F it. Kinross, KGC is one of them. This Humana, this AUY I've been kind of nibbling at. I'm up on all of these, oddly enough. And then what was the other one? There was one more. Harmony, HMY. I've been kind of dumpster diving in those because I figured they're levered and they could get the most bang for the buck. The best of them, though, of all the gold stocks, in my humble opinion, is this Rand Gold. And that GOLD is that symbol. That one has been holding above the 200 MA here, and it looks like it's like either getting ready to, it could get ready to kind of take off here. So if you want to play that one long, I like that as long as it holds above the 200 MA. I don't see this getting really bearish until it would lose like the 50 MA, which is kind of close. I think it's around 90. I mean, it's $3 lower, so I'd be a buy the dipper on this as long as the 50 MA holds. If it loses that, you probably want to stop out. I've also been long, again, in the metals. This silver via SLV, I've been short puts. I've been adding. Today was technically a range breakout, although really not with all that much conviction. Anything over 1753 is still bullish. I think that that's an okay. I think that that's sort of okay as long as the 200 MA holds there. That's the key for silver. I'd probably be looking to book some of the profitos on a pullback. I mean, if it lost the 200 MA. So yeah, I mean, I've been venturing in metals, and I didn't even quite realize how long I had gotten, but I am up to the gills, and that really was very good profit P&L wise this week. So yeah, that's the scoop with that. The dollar has been getting smoked. I've been using Dixie lately as my kind of proxy for that since they started with the games with the DX. So you had a look below and fail on 327. We were expecting the rally up. It's still to lower highs. Today firmed up nicely, but we're still below the 50 MA. And it's still considered in a downtrend. I would flip out of the metal plays if the dollar breaks the downtrend, and that I'll show in the weekend review video. So a little teaser for that. What's this symbol here? Someone asked me about the Turkish lira. We will not be discussing that here. It's not really something I'm interested in. Chipotle. So I've been eating in Chipotle again, by the way. I was a little bit early on that. It's breaking out of the channel here. It's been stalled at the channel high, and today broke out of a consolidation pattern. Higher highs, higher lows. The stock looks like it's trying to turn. What I don't like, and what I'm real careful about here, is that they have earnings coming up, and it's run a lot. If you've been long Chipotle, I'd probably be looking to book some profits on Pops. This might have another washout in the mix, but I think that washout would be maybe the one to buy if that were to happen. If it just takes off, hey, you probably just missed it. But as far as risk reward goes here, I'm starting to, I like it, but I'm getting a little iffy about it. It's breaking out of a long base. I mean, the pattern looks real good. I like it for buy the dips as far as I'm concerned with Chipotle, which is a change for me. I have a personal history with Chipotle on earnings, which I don't play. I'm fine with playing Chipotle any other times other than earnings. I once did a trade in Chipotle for earnings that wound up being a multi-standard deviation move. It, of course, always happens when I'm on vacation, and it wound up being an expensive day at the office. So I don't mess with that thing around earnings. As far as PayPal goes, so it had a downgrade the other day. It's been holding in pretty well, right? It's been holding the 50 MA. I like over-owning shares. I like being short puts at $40 or below strikes. Anywhere between, like, let's say 37 to 40, depending on how long you want to go. I'm fine with that, and particularly on dips. If there's a stock that has a takeover potential, and I don't like to speculate on takeovers, PayPal to me would be one of those. Its bigger brother also, eBay, seems to be one like that as well. That seems like there's something going on, and someone knows something with that stock. Talk about, I mean, it was almost at a 52-week high today. It was just shy of it. But, I mean, I don't know if I would be first chasing eBay here, but I hate to say the hard trade would be to be long, and it looks like it's going higher. So those trades to me seem interesting. As far as tech goes, it seems like it's in a bit of a pullback. I'll get into that in the weekend review video, but as far as Apple goes, as long as it's below the 20 MA, it's still a little vulnerable to me. It hasn't really broken the range low, which is 40.15, although it did have a look below and fail 2 days ago. For me, if you want to be long Apple, you probably want to do it lower on the backside of the old consolidation channel, closer to like 34s, 35s. And when I say 34s, 35s, I mean 134s, 135s, which was sort of the breakout area. Or on momentum back over 143.35, and I'll, again, in the weekend video, show that and why I'm thinking that. So that's the Apple. Let's talk about the two 800-pound gorillas in the room. The first one, I'm sure you can guess, is, of course, Amazon. The breakout in Amazon really took place between 847.21 and 860.86. The 100 MA is between that. I'm sorry, not the 100 MA. The 50 MA is down in that area. Amazon, I had been bullish on it. I'm still bullish on it, but I had been thinking it would have a bit of a pullback. The stock is starting to make some lower highs and lower lows. This is all one leg. So I don't really think this thing is just going to completely fall apart. I mean, like, for me, the absolute worst case scenario for this would be a move down to the channel low, which is the reference low of 833.5. Rather than owning the stock outright, I think the better play is on dips while it's coming down to sell out of the money premium, depending on your time frame. If you're a longer time frame, I would do it below the 200 MA, which would be sub 800. If you're near dated, you probably want to do it somewhere in like the the mid 800 levels, mid to low 800 levels. Tesla, one I've been real bullish on, and finally it reached my my price targets. The channel high and the 1.618 fib, like if we were to do the channel high, let's say like Tuesday, it would be 318, and the 1.618 fib extension is 325. My price target for this bad boy was 306.48. We got 313, and then you had a, this is actually fairly typical price action. If you look at how this thing topped out in February, you had like a couple of days down, followed by a couple of sharp days up before it started going down again. I like the idea of booking some profits in Tesla. I do, however, think that this stock is going to hang out high for a while because they don't have capital raises on the horizon. And Musk today came out with some very, very bullish tweets, and he's talking about them having now a convertible car, the Model 3, coming out in July, I believe. So my guess is people will probably stay long, and then maybe it'll be sell the news event on that. But then again, now in September, he's going to launch a truck. Apparently, he's getting into the trucking industry, and if that's true, that's a bit of a game changer in my playbook. I just updated the fib levels for Tesla. Anyway, if you want to be long Tesla, kind of the same thing. As it comes down into the lows, as it comes down to retest levels, maybe like if this were to get even back down to trend, believe it or not, trend right now is at the key breakout point of the 265. So I like selling out of the money puts on dips on that below the 265 strike, because that should theoretically now be some more serious support. There's really the last sort of swing high was 287.39. So within that $20, and I know it's a lot, is the kind of support band in my view for Tesla. I'm still short puts in that, and I would add to it on a move lower. I think we covered a lot today. I don't want to steal my thunder from my weekend review video here because there is some more stuff to discuss, and we're now starting to get very technical, and I like to keep it a little bit more stuff that I don't have to show charts for as much, and basically we've gotten more technical here than I'd wanted to. So let's just for a moment talk about how to kind of trade the market here. Today we had in the ES, we've been stalling out in the market. It keeps hitting this 2356 quarter to 2354.75 level, which was kind of the breakdown of the range, and then it backs off. And the more times we hit that, the less resistance it'll be, but it has been where they've been selling it. And today into the close, I think was just a matter of poor highs. The algos were keying off the 200 MA 15-minute, And when we couldn't get through there, I think they kind of sold it, and I think people were worried about the weekend risk. I was hoping it was going to actually get even still sloppier into the close, but they kind of saved it last minute. I think, like I said, I think the market, I'm just going to keep it real simple like this. And I don't know, I don't know how to express this any better than this. As long as we're below the 50 MA, the 100 MA is in play. If you get back up above the 50 and you get back up above Wednesday's high, then I like the play to the upside. So I either like it long, lower, short here for lower, or long lower or long higher, if that makes sense. I'll repeat that again. If we're below the 50 MA, I think the 100 MA is in play. I either like it long lower, meaning down closer to the 100 MA and the retest of the breakout level, or long higher over Wednesday's high, which was the 235.18 for the move back up. Like this all still would be considered consolidation range. And if the 231.61 held, like let's say we had like a small gap down Monday and that area held, it could be a throwback higher. So right now my initial thought is that I think we're going to see the 100 MA and we'll reevaluate things at the 100 MA. Of course, if the 100 MA fails, then we have a 200 MA in play, and I don't want to open the door to that conversation yet because I don't really think it's going to be a relevant one just yet, because I am anticipating that 100 MA area, barring some kind of like crazy event like nuclear war, should hold. I don't think that anything that's going on right now here should be impacting S&P earnings. So I don't really, like I said, I think the market just ran a lot, and I think that this is a nice pullback that has been probably well warranted and deserved. If you notice one thing, and I want to comment as far as price action goes, for days and days and days, the people of every morning, we have this overnight inventory that's short, and people just keep loading up and loading up and loading up short, and they're not getting rewarded for it very much by price. The longer that keeps up, any move to the upside would cause a very violent to the upside. So, and I don't want to discount that as being a possibility. So just be wary of that. That as bearish as everyone wants to be, there is a potential for an upside play. And I will show what both of those would look like, what the down move would look like, some downside targets, both near term and more intermediate term. I'm not going to talk about long term because there is no long term anymore on Twitter in 140 characters. Long term is sort of like gone, the way of the dodo. But we'll discuss. When I say we again, I mean me. The royal we is me. I will discuss what I think as far as what both the upside and the downside would look like. Anyway, I hope everyone has a great weekend. I will see you on Sunday. Have a great rest of your weekend, and cheers.